Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Industrial and Commercial Bank of China Limited interim report. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand or sustain the business. The Industrial and Commercial Bank of China Limited offers a wide range of banking products and services to both corporate and individual customers. The company operates through three main segments: corporate banking, personal banking, and treasury operations. Under the corporate banking segment, the bank provides financial products and services such as deposit-taking activities, trade financing, corporate wealth management, custody, and various corporate intermediary services. It also offers corporate loans to corporations, government agencies, and financial institutions. The personal banking segment caters to individual customers by providing financial products and services including deposit-taking activities, personal loans, card business, personal wealth management services, and various personal intermediary services. In addition to these core banking services, the company is involved in other businesses such as fundraising, asset management, insurance, debt for equity swaps, and issuance of wealth management products. It also offers financial leasing, internet and mobile banking, debit and credit cards, and consulting services. The bank's treasury business segment is responsible for money market transactions, investment securities, and foreign exchange transactions business. Overall, the Industrial and Commercial Bank of China Limited provides a comprehensive range of banking services to its customers both domestically and internationally. The stock price of ICBC has increased by 31.06% in the past year due to a combination of strong financial performance, attractive dividends, strategic operational advancements, and supportive market conditions. ICBC's robust financial results have been a key driver of its stock price increase. The bank reported a 3.3% year-on-year profit boost in Q3 2025, largely due to a 43% surge in trading income that compensated for pressures on net interest margins. Its third-quarter net profit as of October 30, 2024, rose by 3.8% to 98.56 billion yuan, surpassing analyst expectations. In addition to its strong financial performance, ICBC's attractive dividend yield has also attracted income-focused investors in an environment of low interest rates. The bank recorded the highest dividend payout among A-share-listed companies in 2025, amounting to RMB 1,601.69 billion. ICBC's market leadership and government backing have also contributed to its stock price increase. The bank's consistent ranking as the top global bank for 12 consecutive years in 2024 underscored its market leadership, providing cost advantages, diversified funding, and the assurance of government support. Furthermore, ICBC has made significant progress in strategic operational improvements through 5 transformations, focusing on intelligent risk control, modern layout, digital drivers, diversified structure, and ecological foundation. The expansion of its digital banking services and the introduction of innovative products have improved its overall performance and strengthened its market position, boosting investor confidence. The supportive market and policy environment has also played a role in ICBC's stock price increase. Strong fiscal and monetary policy actions aimed at stimulating the Chinese economy have supported the robust performance of Chinese banks, including ICBC. The primary drivers of revenue growth or decline in a financial institution are multifaceted and can be attributed to various factors. On the growth side, increased proactive supply of high-quality credit loans has been a significant contributor to revenue growth. Additionally, wealth management services have also played a crucial role, with a balance of RMB 851,583 million in wealth management products. The institution's expansion of financial services coverage and optimization of outlet distribution and service enhancement have also led to increased revenue. Furthermore, the development of new service scenarios based on customer needs, promotion of omnichannel integration and digital synergy, and diversification of insurance products have all contributed to growth. Innovative initiatives such as PDP financing plus long-term leasing in the aviation sector, bulk procurement of spare engines, equity funds like ETFs, and private pension business development have also driven revenue growth. Moreover, increased online, automated, and intelligent operations, enhanced customer service experience, and growth in investment banking and underwriting services have all contributed to the institution's revenue growth. On the other hand, there are no mentioned drivers of revenue decline. This suggests that the institution has been successful in implementing strategies that drive growth and has not experienced significant challenges or setbacks that would lead to a decline in revenue. The net income of the company experienced a decline over the 3-year period, decreasing by 1.8% from 2023 to 2024, and further by 1.6% from 2024 to 2025. This downward trend is also reflected in the operating profit, which decreased by 3.2% from 2023 to 2024, but increased slightly by 0.6% from 2024 to 2025. The decline in net income and operating profit can be attributed to several factors, including a decrease in net interest income, an increase in non-interest expenses, and impairment losses on loans. These negative influences had a significant impact on the company's profitability, resulting in a decrease in both operating and net profit margins over the 3-year period. The operating profit margin decreased from 48% in 2023 to 47.9% in 2025, while the net profit margin declined from 44.8% in 2023 to 42.6% in 2025. The slight increase in operating profit margin from 2024 to 2025 was a result of a minor increase in operating income, which partially offset the negative effects of other factors. The company's financial performance indicates a positive trend in its operating cash flow. According to the provided data, the company generated significant positive operating cash flows in both 2025 and 2023, with amounts of 786,317 million RMB and 1,297,269 million RMB, respectively. This suggests that the company is able to generate sufficient cash from its core operations to meet its financial obligations. In contrast, the negative operating cash flow reported for 2024 was a one-time anomaly, indicating that the company's overall performance remains strong. The performance of various segments and regions in the industry has been mixed. On a positive note, several sectors have shown significant growth. Manufacturing, sci-tech innovation, green development, inclusive small and micro enterprises, international trade finance, and personal consumption loans have all performed well. International trade finance saw a notable increase of 35.4%, while personal consumption loans rose by 10.2%. Additionally, personal banking and treasury operations generated substantial operating profits of RMB 92,769 and RMB 39,075 respectively. In contrast, the others category has struggled, resulting in an operating loss of RMB 104,529. Corporate banking, while not a poor performer, did not quite match the impressive figures seen in other areas, with an operating income of RMB 197,723 and an operating profit of RMB 63,568. Overall, these results indicate that certain sectors are driving growth, while others require improvement. Management is optimistic about ICBC's future prospects, with a clear vision to become a world-class financial institution with Chinese characteristics. The bank aims to maintain its position as a global leader in key areas such as total assets, capital, deposits, and loans. To achieve this goal, ICBC will focus on serving China's modernization efforts and contributing to the country's emergence as a financial powerhouse. In terms of sustainability, ICBC is committed to promoting environmental, social, and governance (ESG) advisory services and green finance initiatives. The bank has made significant contributions to rural revitalization and plans to invest RMB 8 billion in the National Green Development Fund Co., Limited. ICBC's investment strategy involves optimizing its equity interests and voting rights in associate companies, such as Standard Bank. The company also aims to realize synergies from acquisitions through goodwill. Risk management is a key priority for ICBC, with a focus on maintaining stability in deposit bases and optimizing asset structures. The bank has made significant progress in improving its financial health, with a notable decrease in net liquidity gaps. Financially, ICBC has reported strong operating income of RMB 409.082 billion, driven by growth in the corporate banking segment. Overall, management is confident about ICBC's prospects for continued growth and success. The company's financial reports reveal a consistent trend of paying out significant amounts to its shareholders. In 2024, the company distributed a substantial sum for both interim and year-end cash dividends, totaling RMB 51,109 million and RMB 58,664 million respectively. This indicates that the company has prioritized dividend payments as part of its financial strategy. Furthermore, the report also mentions that in 2025, the company declared and paid out an even higher amount of RMB 109,773 million to its shareholders. This suggests a continued commitment to rewarding investors through dividend payments. Overall, these figures demonstrate that the company has indeed prioritized paying dividends to its shareholders over buying back shares. That concludes the financial summary for Industrial and Commercial Bank of China Limited. Feel free to comment below, and I will be happy to answer them when possible.